Hello, my name is Richard Dixon, owner of Morgantial Planner, a mortgage company. Today I want to talk about PMI, which actually stands for Private Mortgage Insurance. Most all conventional loans, government loans as well have PMI, but today I want to concentrate and talk about conventional loans. Now, the older generations always said, hey, you need to save 20%, put in a down payment to avoid PMI, which is a great principle behind it, but that only works for a very, very small percentage of home buyers, because a lot of people just don't have 20%, especially with the price of homes today. But nevertheless, for those ones that do have down payment, they've got plenty of money in their retirement assets and so forth, and cash flow is good, I totally agree. Put the down payment. Now, the majority of Americans that can't do that, what PMI insurance does is it actually protects, it's an insurance premium or policy monthly that the buyer pays for, but it actually doesn't protect the buyer. It protects the actual lender that's servicing the loan, just in case of a default, of a foreclosure, God forbid not, but nevertheless, if there's a shortage amount of money that is owed to the lender, okay, after the sale is made, of the property is made, then that PMI, private mortgage insurance, covers and protects the actual lender. You know, it's unlike a homeowner's insurance, which actually protects the home, the property, but this here protects the actual lender. Now, here's the thing. Here's the pluses and minuses of PMI insurance, all right? Well, naturally, the minuses are you have to pay a little bit of some kind of premium every month, to the lender until the loan balance reaches 78% of the acquisition price. Okay, whatever the purchase price of the property was with your down payment, once it reaches 78%, the loan balance, whether it takes 3 to 5 years, the PMI will fall off. Well, I always recommend people to at least call the lender, say, here, I'm down to this 78%, now remove my PMI. Okay, that's the best way to ensure yourself that it'll be removed. So here's the other thing. The higher the credit scores, as I mentioned in my other videos, naturally, you're going to get more favorable or lower premium for PMI insurance, just like you are the rates, just like lower cost. So, the thing to do, again, I'll go back to basics. Build your credit score as high as possible. That way, you're paying, minimal amount of money for PMI insurance. It's not as high as people think it is. I mean, a $200,000 loan, so PMI is under $25. It's the right credit score. So again, at the end of the day, there's no sense of completely draining your account for the sake of purchasing a home. I'm not a big fan of that. I always have reserve money, emergency funds, etc. Get it, make sure everything else is all balanced out. You counterbalance your finances as you're making a home purchase. So that way you can enjoy a healthier, happier lifestyle in your home. All right. Again, Richard Dixon, Morgantial Planner. Look forward to working with you. Take care.